Africa has made great strides in financial inclusion over the past 10 years. There has also been an unprecedented growth in the number of people who have access to digital financial services. These services are key to the growth and development and the future of banking on the continent. So join me as we attend the IFC and Mastercard Foundation's Partnership for Financial Inclusion 2018 Knowledge Event in Dar es Salaam, Tanzania. Around 250 regional and global industry practitioners and experts got together to share experiences, discuss challenges, and create new ideas for the future of financial inclusion in sub-Saharan Africa and beyond. In-depth panel discussions, breakaway sessions, a keynote address, and interactive discussions provided further opportunities to share knowledge. The agenda featured topics such as the business case for digital financial services, innovations in digitizing value chains, e-commerce and fintech platforms, and understanding the impact of digital financial services on the end user. The purpose of the $37.4 million joint initiative of the IFC and the Mastercard Foundation was to expand microfinance and advance digital financial services on the continent.
I think this program has achieved far more than what we expected. 11.4 million new clients are now using digital financial services. In addition, through the partnership with the IFC, we have also seen the network of partners open 1.2 million new savings accounts. And we're also seeing the volume of transactions in mobile money, the flow through is $390 million per month. So this is a volume, both in terms of number of clients, in terms of number of transactions and throughput that we did not foresee at the outset of this partnership.
What we've learned is, one, don't stand in the way of private initiative. What we found was that there were so many digital entrepreneurs moving into this space, and we also found that even our existing clients, we have traditionally worked in the financial sector already for more than 20 years in the access to finance space. Even many of our traditional partners who have had big cost challenges to create more access to finance have aggressively used digital technologies to reduce their costs and improve their reach. And so in that sense, there's a fundamental shift in the economics of the business due to digitization. And so what we've tried to do is not stand in the way, make sure to bring people together. So in fact, this partnership here has created a wonderful meeting place, meeting ground to make people meet, exchange ideas, and not be secret about it, because of course in the traditional profit-driven world, one usually doesn't want to share one's business secrets with one's competitors. And I think what this partnership has really enabled is a much more of an open information exchange, because everybody was a pioneer. And so people have learned from each other and have brought ideas that were, for instance, developed here in East Africa to the west of the continent.
I have heard that, for example, Nigeria is the largest population on the continent, but the uptake for digital financial services has not been as great as expected.
Yeah, absolutely. Thank you very much. It's actually a major gap, at least, that we have seen as a country. And we've realized that, at least, for us to achieve much success in the financial space, we must actually more or less include quite a lot of people that today are unbanked and even underbanked, as it were. And Nigeria being the largest population in Africa and also a large market, as it were, we realize that there is a need for a lot of adult populations to kind of at least adopt the opportunity within the financial space. And that's why, even from the government perspective, it has now behooved on everyone to say, okay, there's so much that needs to be done in achieving this landmark opportunity.
Digitization is the future for financial inclusion, I would say. Without it, and especially in this part of the world, the sub-Saharan African continent, it's difficult to really prosper as a financial institution without digital operations. And I say this because primarily we lack what we call critical masses in our areas of operation, that's the rural areas. You have to walk or drive kilometers for you to get a sizable number of eligible customers to access financial services, and therefore denying you a business case to operate in rural areas. But with digital operations, you are able to reach these customers without necessarily having to be present in rural areas. The other important thing about digitization of microfinance operations is the ability to scale up. Lack of scale has been a major challenge for financial players, and especially our peers. And without scale, then you are not sustainable. And interesting enough, digital operations is able to deliver you both scale and in terms of reducing your operational cost or expenses, and therefore driving you towards sustainability at an early stage. So for me, digital operations is a lifeline for microfinance institutions and a critical factor in promoting financial inclusion in rural areas.
We are currently active in both Kenya and Tanzania.
Okay, and these are good markets for you?
Excellent markets. I think with the prevalence and adoption of mobile money, it's an amazing enabling technology for other value-added services like mobile credit. And I think Tala recognizes that East Africa is a really rich region in terms of the innovation that's going on, the opportunities both for companies, public sector, NGOs, and ultimately consumers to benefit from a really enabling ecosystem.
You can see, of course, the example of M-Pesa and other mobile network operators that have moved into the payment space. There's wonderful examples from also West Africa about the adoption of these technologies, and the private sector is not waiting. They invest, and we invest with them.
At Tala, we see our mission and objective to create that access, choice, and control to financial services for the globally underserved, and we see that East Africa for us has been a launching point, but we really see it as a global mission that with partners like IFC and Mastercard Foundation that we could tackle together. And ultimately, Tala will be one of many solutions that we hope consumers will have access to.
We've had to look at the structure of our MNO operation, our mobile network operator, and have had to separate the businesses. So we've strategically set up a digital financial services business separate from the mobile network operator. This obviously brings focus in terms of the work that they're doing and responsibility and accountability. And resultantly, we've set up a group called Cassava. Cassava comes from the cassava plant, which is consumed in over 52 countries in Africa. And the ethos of Cassava is we are here to transform people's lives, the unbanked, the unserviced, and our idea is we must bring solutions to that community and to that population. So separating the business is one key lesson that we've learned. We've also learned a valuable lesson in terms of education, customer education, digital literacy education. You can have even an educated person who is digitally illiterate. And as long as someone is digitally illiterate, they will not explore the depth and the width of the value proposition that you're proposing. So they'll probably only do person-to-person transaction, whereas they can do payments, whereas they can actually set up debit orders and stop orders on their mobile wallet. So that's a key lesson that we've learned, especially on the lower segment where we've found that most people are scared of the handset, they're scared of experimenting, because they'll think their money will disappear. So once you start taking them through the education campaigns that we run, you'll see that they'll become financially independent.
Part of our agenda is to ensure that we get more customers into the financial space using the financial inclusion strategy by adopting the mass market innovative products, and most critically using digital finance as an opportunity to reach out, to these customers within the rural and the peri-urban communities.
At one of the breakout sessions, the Handbook on Digital Financial Services for Agriculture was launched.
So the principal objective of the handbook was to provide a practical guide for the financial services industry. It is intended to allow for new financial products and services to reach traditionally underserved market segments in sub-Saharan Africa, notably rural populations, and then within that, looking specifically at the role of smallholder farmers, both male and female. So in addition to a practical guide, we also wanted to recognize that a lot of the success around financial inclusion in sub-Saharan Africa, while true, there is still plenty of work that needs to be done in terms of bringing these services and products to the last mile, especially in agriculture. So we wanted to take kind of account for that broader context. We were also interested in, and one of the objectives is to provide new ways of looking at the agricultural sector. How do we bring frameworks and relevant approaches and tools so that financial services providers can, I think, understand the agricultural sector in new ways, taking into account the fact that the role of new digital data and also the role of partnerships can play a very vital role in bringing new products and new opportunities to the market.
You were also here at the Agriculture Handbook launch. Why is agriculture important for you?
Yeah, agriculture is actually more or less, very, very important because we've identified that we have in Nigeria, we have over 30 million smallholder farmers today who are actually more or less, yearning for potential growth and also looking for opportunities to kind of at least increase their farm lead and also make much more money and much revenue in the services that they do. For us as FCMB, we are a major player among committee of banks that are doing so much helping these smallholder farmers and trying to kind of at least bring them into the financial inclusion space. This particular area aspect of this program is very keen for me because today I'm rolling out a lot of agency banking presence within the smallholder farm space, and we realize that the best way to reach them is to actually move closer to where they are, where the farmers are, and help to onboard them and introduce them to digital financial services.
So how many branches do you have in the rural areas?
Within the rural communities today, at least, we have a presence across about 30 to 40 branches, but we are now using the vehicle of agency banking to kind of at least stroll and cross over to much further locations of the agric farmland and also the agri-commodity areas. Today, we have rolled out as much as about 120 agency banking areas among these smallholder farmers, and our target is to actually drive this up to about 500 between now and end of the year. And with the ambition to also kind of at least drive this major agenda into 2019 to increase our reach within the agri small older farmers commodity to about 1,000 at least agency banking space.
Given the existing challenges I think that many of us are familiar with serving agriculture sectors with financial services, is that partnerships are absolutely vital. These partnerships have to be brought together not only in terms of technology, but also in terms of how do you bring that product to market. So there are also considerations around business models and operating models. Those partnerships are essential, but understanding and actively designing those partnerships is crucial. The other finding or key message that we want to highlight is the role of digital data, specifically digital data that is not financial in nature. There has been a proliferation of digital solutions that are creating new information sources around agricultural practices, whether it's practices on the farm, whether it's practices in terms of processing, transportation, and shipment, and all of this is bringing new visibility that is allowing financial services providers to better define risk, evaluate risk, and then bring services that I think are effective, appropriate, and affordable for rural customers.
Now, working with these smallholder farmers, what do you find is their main resistance to digital finance?
Yeah, for sure. At least, we did a study. We actually carried out a survey to kind of identify the values that the smallholder farmers can actually derive from digital finance space. And we realized that when you have a unique value proposition, that you take to the market, to these farmers, they will surely buy it. And part of what we're considering is that we have to kind of develop a solution that will bring on board a financial literacy and education opportunity to actually more or less help the farmers' knowledge, and also have a linkage with the kind of outgrower schemes who would help these smallholder farmers, educate them and helping them in understanding how they can increase their farm yield in order to bring better output and increase their productivity. So this is a kind of approach that we are trying to use to kind of at least get many of them to buy into digital financial services, and also eventually more or less own a bank account and continuously more or less save money and save for the rainy day.
Another matter for discussion was the role of regulators on the continent. How do you think we have been performing so far?
I think we have made tremendous progress over the last 1 decade and a half almost. What we have been able to achieve within that time is more than 4 or 5 times what we were able to do the earlier 40 years, more or less. And technology has been a big game changer. But technology can't work for you unless you give it space. And that space means regulatory authorities, public policy makers have got to allow innovation to lead regulation. It's not reckless, it's that you test new products, new services, you monitor how they perform, what type of risk they have, and then you regulate. And it is only through that stance that you can actually have technology work for you. That's rule number 1. Number 2, technology is not a panacea either, automatic solution. There are other things, including having coordination among all key stakeholders so that you don't get into gridlocks about what is it that collectively should be done. And of course, always making sure that vested interests do not hold us back.
I think for us, what we've learned in terms of regulation is what environments are really conducive to helping to support the kind of expansion we're looking to achieve through a program like this, whether it's on questions around interoperability. Can mobile network operators and banks and MFIs talk to each other? Can information be shared? What does that construct look like within a country? Things related to how can you approve and license agents. Sometimes this takes longer than we would expect, and I know that this caused a challenge for some of our partners in the program. To the extent that you can roll out a new product and you need regulatory approval around the nature of that program. These are all challenges that our partners tried to work through in the course of this program.
So do you think that the regulators on the continent are coming to the party?
Yeah, I think most of them are. There are very few spots that I know, and I won't mention them, which are still struggling. And the struggle, particularly for financial inclusion, has always been the vested interests of financial institutions of yesteryears, which operated on brick and mortar, which typically have found competition by non-bank operators as a source of them losing money. But everybody who has allowed that to happen has found out that it is actually complementary, and it does help the very institutions to do much better.
That's why within the World Bank Group we just want to make sure that governments provide the playing field, that governments help to prime the pump. So for instance, in the digital space, that means move social transfer payments through the new digital channels. which is actually very positive for governments too, because they tend to be much lower cost than the existing channels. And then let the private sector lead the way and thrive, while ensuring that there are certain rules of the game, that there's enough consumer protection, and that we avoid monopolies.
And finally, how was the event received, and what is the way forward?
Some of the key lessons are, one, this always takes a little bit longer than you think. So from the beginning, when you first identify what you think some of the solutions will be, to getting management buy-in, to getting the appropriate solutions put forward, what level of technology do you need, what kind of change needs to happen at the institution, how do you work with the regulatory environment, and most importantly, how are the clients responding and taking up the services. So all of this over time is something that you need to build in. You need to build in time and understanding of what this will take to do. It is not an easy journey. It's actually very complex. But if you're working with the right set of partners, you can achieve great results.
We actually invited on purpose this time colleagues and including some partners from other regions, because the Mastercard Foundation focuses exclusively on Africa. IFC is a global development institution and investor, and so we want to make sure that the lessons are learned elsewhere. In fact, a lot of the knowledge outputs of this partnership have already been translated into other languages and are being used on other continents. We're currently discussing how to link financial inclusion with more of the real sector challenges that this continent is facing: health, education, these kinds of issues. And so we're currently working with the foundation on designing possible solutions that might work in Africa.
I just want to talk about your partnership with the IFC and Mastercard Foundation. How long have you been involved with it, and what does this partnership mean to you?
Yeah, the partnership has actually more or less been a major key drivers in opening up our horizon into the opportunity within the bottom of the pyramid. We've been together now for, I think, a period of 6 years. We started out in 2012 when we actually more or less, contacted IFC to say that we wanted to play within the agency banking space and really need to understand the best models to adopt. And we had a technical assistance relationship with IFC, which has actually more or less been quite phenomenal. They work with us through the journey, opening up our eyes to how well we can start small and then scale up after we've been able to understand at least the basic approach, and also learn our lessons, fail if possible and correct the mistakes, and then make sure that actually we make sure that the agents have more reason to be a partner than just be someone that we use in order to achieve our own necessary ends. So the relationship has actually been very fantastic, and it's been symbiotic. Because through them, we've been able to actually identify that, okay, fine, when we grow, the best approach is to let the market dictate the solution that you are going to kind of at least take to them. And using that, at least we've seen a lot of growth in our approach. And we started out at least with a small agency network that is now growing as much as it is, getting to about 500, 600, and we're closing this year with about 1,000 agents out there in Nigeria.
So we became an endorser of the Responsible Finance Forum's investor guidelines a few weeks ago. And to us, that represents a commitment to bring those guidelines to the fore in how we conduct our business and protect our consumers on a day-to-day basis. So in a variety of ways, both internally and outwardly facing, we're trying to live the ethics of those principles and putting them into practice on a day-to-day basis.
We take all of the knowledge, incredible knowledge and research that's been done about this, within the context of this program, and then we take this and leverage it into different types of programming that we'll do in service to our new strategy around youth employment and solving some of the challenges addressing employment for young people in Africa. So financial inclusion, and how that can help facilitate some of the solutions, whether it's digital or other technology solutions, will be really important for us to take out of this program and inform new programming going forward.
And tell me, this meeting, is it valuable to you?
It's immensely valuable to us, to me personally, because I've actually had at least to learn so much more. Most critically is the launch of this Greek book case study, which is going to help me into the new aspect of opportunities that we've identified in at least, enhancing the inclusiveness of the smallholder farmers into the space.
When you talk about how do we truly reach and acquire rural customers, whether they're individuals or enterprises, that's where you see new partnerships forming between the financial services industry and the agricultural sector. It could be large corporations involved in exportation or distribution, but it could also be national networks of distributors or traders and processors. And so as a result, you're creating kind of new partnerships that are non-traditional and require a lot of planning and preparation, I think, to effectively bring together and then also put into practice.
More and more what we're seeing in Africa is, first of all, the value of partnerships. So instead of having silos where one company tries to produce the whole value chain in-house, we see more and more readiness to engage in partnerships where, for instance, a bank teams up with a mobile network operator or with a digital financial services provider, a third party, to get it right. That's one. The second thing in Africa that we're seeing is more of a regional expansion, which is wonderful to see. We're here in the East African community right now, which I think has sometimes played below its class in terms of bigger lot sizes and economies of scale. What we're now seeing is we see, for instance, West African companies investing in East Africa in this space, and that's really great. I find that very, very positive. And then internationally, I think we're now seeing a lot of cooperation where we see, for instance, operators out of Southern Africa moving to Latin America or even to Asia with their technologies that were developed in an African context. And what African providers are very good at is to make their solutions cost efficient so that they can work in very rural contexts. There's no continent that is as rural as Africa is, so whatever works here is going to work pretty much in any other rural area in the world.
2 days of robust discussions, high-level networking, and the sharing of case studies and learnings. The digital financial services market is still nascent in Africa and is evolving rapidly. Therefore, opportunities to share knowledge, like at this event, are crucial in the expansion of financial inclusion.